when I got invited to be a speaker at the Global Ethics Summit, it was interesting because it's a New York-based event, but for the first time they thought, okay, it's good to have someone from Latin America speaking at the event. And basically I see two things to it. One, as you mentioned, emerging markets is sort of the new topic. It's the hot topic in town. Brazil being the country attracting most of the investment from abroad, and at the same time a lot of Latin American countries showing a very good run through this economic crisis. This has led that a lot of foreign investors and U.S. investors are looking at emerging markets as the way of making money down the road. And this puts a heightened attention in the idea of risk management, which is a lot of what we do, how we help investors. We help people understand how to do business in a lot of these business environments, how to deal with people in some of these emerging markets. What's interesting is that the concept of due diligence, which is a methodology to understanding with who you're doing business with. Due diligence used to be more of a legal concept. Now it's a concept used both reputationally, financially, in many aspects in the decision-making process. And the interesting part is that due diligence in Latin America has become key in the way of driving business. People want to know with who they're sitting down, with who are they negotiating, with who are they going to business with. Basically is who are they sleeping with. And that's the importance of a lot of the work we do for foreign investors going into emerging markets.
Is this a good time for investment in emerging markets?
I definitely think so. We did here this year two studies. One of them was called Fire Sales in Latin America, which showed that a lot of the big opportunities in M&A were going to come from emerging markets for two reasons. One, the performance of companies in emerging markets was much better than the performance of those same companies in developed countries, Europe, the US, even some Asian countries. And what we saw is that some of the big corporations were going to have to go to these markets to sell their assets, basically because they needed cash to support their operations in the US and in Europe. This led for great opportunities both for local investors, for local private equity funds, to suddenly have the opportunity to go after assets that otherwise would not be in the market for sale. So that's been one of the first reasons we saw emerging markets got a lot of attention, is people saw, hey, I've got a good operation running in a Brazil, in a Colombia, in a Mexico. This is the time to sell it so we can support our operations locally. The second one is, as you mentioned, if you see the GDP growth of countries like Brazil and Chile and Colombia and Peru and some of the Latin American countries who have been showing a steady growth throughout the last couple of years, even through the crises, they were able to sustain their levels of market opportunities, growth, etc. And this has led people to suddenly look more serious at Latin America in general as opportunity for growth down the years. Traditionally, you've got two standards, the US standard and the European standard. And the US standard had been, okay, we need to go do business in a lot of these countries and behave ourselves as good global corporate citizens, if you could call it that way. Basically, they try to conduct business in these countries in the same way they would conduct business in the US. For European countries, it was a bit different. There were even some tax incentives for German companies and for other European companies to go and do business through, let's say, incentivizing corrupt practices. That changed a lot after Sarbanes-Oxley. Basically, there's a law called Foreign Corrupt Practices Act, the FCPA Act, and that law basically obliges any US corporation or any corporation publicly traded in the stock exchange to have a certain level of behavior, whether in the US or abroad. This leads to that if you're doing business in a certain country and you're asked for a bribe or you're asked for some money, some ease payment to get a certain type of business, not only you're not allowed to by US law, you're not allowed to sometimes by local law, but at the same time is that a lot of companies used to put a blind eye to it. They would basically say, hey, whatever you do in that country, don't tell me, no problem, I'll deal with it later. What happened is that with SOX, companies in their book and records need to account for every way they spend the dollar, whether in the US or abroad. So companies basically have to put in their books and records that if they're paying a bribe or they're paying a certain ease payment in a given country, they need to put in the records. What happened is a lot of these companies were not doing it. And this went through, this is an act from 1977. The issue is that after Sarbanes-Oxley, the Department of Justice in the last 2 and 3 years have really used this law to start scrutinizing the behavior of US corporations abroad. And this has led to much more scrutiny in the way these companies reported their financial gains in these countries. And that's, I believe, the challenge. So to your question is, definitely emerging markets pose great opportunities, but pose great challenges because there's a lot of behaviors, embedded behaviors in the way you do business with governments, in the way you do business, you compete against other companies in trying to get a market share. And that's where companies are gonna be challenged as to, okay, I still wanna do business in a Mexico, I still wanna do business in a Brazil, I still wanna do business in an Argentina, but I have to behave differently from my local competitors who do not have to abide by these laws. And I still have to make money. I have to represent a profit to my shareholders who in the end are going to say, hey, why are you doing business in such country if you're not making money? And I think that's the challenge, is how to compete in an environment that's going to pose a lot of risks, that could get you in trouble with US authorities, but at the same time that represent great opportunity. I think Brazil is definitely the flavor in town, or the flavor of the month. And basically because Brazil has shown, let's say, a lot of good trends in its macroeconomic behavior in the last year, basically. It's shown that one, it's dependent in a local demand. So that has, let's say, blindar,
secure.
Yeah, secure Brazil from, let's say, the attacks or the problems in the global economy, because it's dependent a lot on its own local economy. Second, the central bank has shown a lot of independence in this last year. So definitely Brazil is where you see one of the countries that's attracting a lot of the private equity dollars, not only from Brazilian companies, but also from foreign companies. So Brazil is definitely an important one. Peru, because of its GDP growth, continues to be a country that attracts a lot of foreign investment. Mexico, eventually the US is going to grow. The US is investing a lot of money in a lot of different projects. And Mexico has proven that being a good neighbor, it took the toll this year, but I think it's also going to bounce back as soon as the US economy bounces back. Colombia continues because of the security situation becoming an attractive gem. Basically because for many years people did not invest in Colombia. So as soon as that they see a good investing environment, they see Colombia as a good opportunity. But at the same time, an example we make here, or the analysis our team has done here, is Argentina. Argentina is a country that has been beaten for the last 8 years. Tough economic situation, investors are wary, but at the same time you see some political changes in the Argentinian political environment. Will that lead to a change of government? Will that lead to a change of mentality? Will that lead to a sense of fiscal responsibility? If that's the case, I'm sure Argentina, once it turns the page from these kind of populist regimes, is going to bounce back, because you've got Argentinians who have not bought a refrigerator in the last 10 years, have not changed their cars in the last 10 years. All this generates opportunity for businesses who are there, that as soon as a country does some positive changes and makes a comeback, that the economy bounces back. So I tell you, I do see some opportunities there. Definitely the Asian countries continue to represent great opportunities. We've seen it with China, India a bit more of a challenge. But generally I do think that companies are going to continue looking at emerging markets as the way for growing in the next couple of years.